Hello, Amanda. Thank you so much for the introduction. I'm really excited to be here. Today, my topic is about AI applications in finance. Um, Before we get started, I would like to quickly introduce myself. My name is Cindy Lin. I'm a data scientist who specializes in finance. I started out working as a quantitative researcher, building predictive models for pricing, for trading, for risk management. Pivot to fintech a few years ago. I've seen a lot of efficiencies in large financial companies, and I thought fintech is revolutionary. There's a lot of room for improvements. So I've done both traditional finance and fintech, so understand the perspective on both sides. I have two different passions. First of all, building customizable investment solutions for everyone, not just for high net worth individuals. It is achievable nowadays with the use of AI and machine learning. I'm also very passionate about using AI to help moms in different ways. I am mom myself, and I know it's a very overwhelming task. With the prominence of AI and machine learning tools, I think there are ways to make my mom's life easier. So let's just get started with my presentation. I have to say, this is more than generative AI. So Gen AI has been a buzzword in the past few months, and it's revolutionary in the way that it puts AI in everyone's hands. Everyone can use ChatGPT. Everyone can see it in action, can get a benefit out of it. But Gen AI is only a very small subset of AI. So looking at this chart, you can see the large circle of artificial intelligence. Under that, there's machine learning, there's deep learning, and it also branches out to natural language processing and computer vision. But Gen AI and large language model is only a very small piece of it. So today I wanted to just introduce different kind of AI applications other than Gen AI, particularly in the consumer finance space. So there are two different aspects of AI. Gen AI, we just talked about briefly, it generates new content such as text, images, and music. And the other school of thought is discriminative AI. It focuses on tasks such as like classification, prediction, and decision making. Examples would be like spam filters, fraud detections, and recommendations. There are also two different types of AI adoptions. One is more strategic, like new products or improvements to existing solutions. For examples, like you can build a model to analyze customer behavior for marketing purposes. We can also build a model to look into early signs for defaults on the loan. The other type is to improve the efficiency. These are like services that allow a company to do more with fewer employees. Gen AI has a lot of applications in this category, such as chatbot, automatic code generation. One of the prominent example is Klarna, is the buy now pay later fintech company. Um, there was an article coming out earlier saying that they had to lay off 700 employees in their customer service department, and they instead like apply the AI assistant, and the assistant seems to be performing pretty good, as good as 700 employees. So this is like one prominent use case of chatbot. I want to talk about AI's impact in finance, particularly in the consumer finance space. So what it does, it helps enhance consumer experience in different ways. First of all, personalization. It can help tailor and customize financial products and services for individuals' needs. It just makes things much more convenient. It can automate a lot of routine financial tasks. It increases security with the newer tools introducing use, created by AI. We can enhance the production of consumer data and transactions. Lastly, it can make finance much more accessible. If it's more affordable, if it's cheaper, if it's much easier to get credits, the service will be available to a broader audience. Here, I'm going to talk about a few use cases of AI applications in financial services. The first one will be robot advisor. So traditionally, if you want to have to work with a financial advisor, you need to book a time with this person, meet this person, and then like fill in all the rich questionnaire, and then this person will come back with like a recommendation of your for your portfolio, and afterwards you meet with this person regularly in order to review the performance of your portfolio. So there's a lot of back and forth there. And the newer way of doing so is robot advisor. It is revolutionary in the way that traditionally the financial advisor, it is only available to high net worth individuals. With robot advisors, it's much more accessible to everyone. First of all, the personalized recommendation solution are built using AI machine learning tools. You filled out like a questionnaire online. You just specify your investment preference, and the model is able to put together a personalized recommendation for you. And it's much more affordable by without like working with a human going back and forth. Also with the introduction of like no fee trading, through a lot of fintech, innovative fintech brokerage companies that make trading and invest much more affordable. This is also instantaneous. You can do everything online. It's 24/7. You can open an account and get approved and start trading. And a lot of those platforms, they also have automatic portfolio monitoring and rebalancing built in. So it's like you have like a financial advisor like watching your portfolios for you. So when anything happened, you can make adjustments. So these are revolutionary in the way that it make like financial advice much more accessible to average investors. But I think I personally think there's a lot of room for investment for improvements. Part of the reason that I think that currently the investment solution, they are pretty limited, and there could be a lot more to do here. The second one we're going to talk about on the real estate side. So traditionally, if people want to sell the house, you need to work with an agent. The agent is to come in and like work with you to come up with an estimate of the offer price, and there'll be a lot of tourings involved and hoping to get a buyer. And once you find a buyer, you are just hoping that the buyer will get its mortgage approved. So this is a very stressful process. It will take time, and sometimes when things don't work out, you have to start all over it again. But now we have a newer solution. So there's a company called Open Door, and you can simply just sell your house to Open Door. It has a hybrid pricing model. First of all, it's a machine learning model trained on large amount of real estate transactions. And secondly, when you sell to Open Door, you do everything online. So you can just fill out the questionnaire and submit some photos so they'll be able to understand the condition of your property. Lastly, they also take the input from local experts. By combining all three, they were able to provide you a pricing. And the benefit of doing so is you only deal with Open Door directly. You don't need to worry about like brokers or like securing the buyers. You just sell it properly directly to them. So it's a much easier process, and you control the timing of when of that to happen as well. But however, since Open Door is doing so much for you, I believe the pricing can be a little bit discounted. The next one, I'm gonna talk about alternative credit data. So traditionally, I think everybody is aware of like credit score. Everyone has a credit score, or most people do. And the model is not very transparent. So far, we only know that they use variables input such as the payment history, amount you owed, length of a credit history, have you recently applied for any new credits, and the mix of your credits. So these are not the full picture of someone's financial health. So this is not very good for people, for example, who have very limited credit history, like students, or for people who are new to the country who don't have any credits. So historically, for this kind of people, if they wanted to apply for the loan, they either get denied or they get like ridiculous high rates. So those are not optimal for the borrowers like in this category. So Upstart, as a fintech unicorn, they have a newer way of solving this problem. So instead of just using the variables like that traditionally used for the traditional credit score system, it has incorporated thousands or more different variables to understand someone's financial health. For example, the income and payroll information, rental payment history, the utility bills, the assets this person owned, the social media presence of this person, and the online subscription services. So adding this additional variables, it is able to understand someone's financial health much better, and hence is able to predict the probability of a default of this person when this person applies to the loan. So this is revolutionary in a way that it makes loans much accessible to people who traditionally don't have access to credit. One more I would like to talk about the cover is on the insurance side. So I think insurance tradition, I think is still not very transparent. I personally tried to was shopping for car insurance last year, trying to do everything online, but whichever platform I went to, it kind of want to redirect me to a phone number to a person. So I ended up having to talk to like a few different agent insurance companies try to get a quote and make a decision afterwards. So I still feel it's just not a very efficient process. But however, I start to see some more innovations in the space. For example, first one is customized pricing. So there is a car insurance company called Root Insurance. It's revolutionary in the way that they are not giving you a pricing based on your demographic, not because you fall under certain category. They actually try to understand your driving behavior. So they created an app. So if you want to get a pricing from them, you can just download an app, and every time when you drive, you just turn the app on. So the app will utilize the sensor of phone to understand your driving behavior. So I feel it's something very interesting. And the second innovation is customized coverage. So one example is AI insurance. So with the prominence of AI, we see a lot of companies start utilizing AI in their daily operations. However, there are a lot of risks involved in doing so. So I start to see AI insurance to help companies navigate these risks. Another innovation is dynamic pricing, similar to airline flight tickets that fluctuates because of demand and supply. This kind of practice is also start to be applied in insurance industry as well. The next one I would like to talk about is fraud detection and security. So there are different kind of examples I've come across. One is, first of all, one is by Visa card. So they have a machine learning powered real-time credit card transaction scoring system. So every time when a transaction coming in with an incoming transaction, they were able to like assign a score to that. To flag the risk of this particular transaction. And by doing so, the decision maker can decide if they want to approve or deny this particular credit transaction. And the second example is by MasterCard. In this press release, is talking about how they utilize Gen AI for its product detection offerings. So first of all, it was able to use Gen AI to process large amount of data sets, and they would be able to identify the newer like fraud patterns. And the other use case is like it is able to identify the full credential of the compromised cards before the cards are actually being used. So this is like truly preventing the fraud to happen before they actually happened. The other interesting use case is Stripe. Stripe has a fraud detection product called Radar, and for its customers, so they have this customized fraud protection rules like that's building for their customers, and the customer can be they can just set the rules in natural language, and the model will be able to turn out to something machine readable and to help them to prevent frauds in their own ways. The next one I'd like to talk about is income identity verifications. But traditionally, if you want to get your ID verified for any kind of use case, you need to either go in person, like to the bank to show your ID, or you need to like just work with a notary. But nowadays, there are different product offerings that's helping people to save time in this area. So the graph I show is from Plaid. It has an ID verification and process. You can simply just do everything online now. So these are the different ways AI to help with fraud detection and security. And the last piece I would like to talk about is risk. And this is extremely important in financial service industry. Part of the reason that the industry is highly regulated and the impact is also very much more detrimental. Like whatever bad decision that happens through using the AI machine learning models, it will impact someone's financial health greatly. So these are the parts that we are trying to avoid. First risk is hallucination and misinformation. I think most people have already aware of this. I've seen this on the news or even experienced that by using the GPT tools. And this is very serious risk in the financial service industry. Because, for example, if the model hallucinates, if the model is not correct, it might recommend a risky investment. It might offer bad investment advice, asking you to sell at the wrong time. Also, they could also say misprice the price of your house. So when someone just sell the house, if the estimated price is undervalued, it can significantly impact someone's financial health. The second risk is unintended bias. So the whole machine learning modeling process is pretty biased in my opinion, but this kind of bias, the building bias sometimes can have unintended consequences. One example is United Health. It used like a faulty AI and the tool ended up denying like elderly patients, which is extremely unfair. So that's something that we need to be really careful about. The third risk is ethical issue. I think we've read a lot about these. The most prominent case is a lawsuit between New York Times and OpenAI and Microsoft. So in finance, like in financial industry, it's just very important. We need to care about like the data privacy. Do we have the permissions to use the data and the integrity of the data and the quality of the data? So these are the things that are very important to know, to understand. And lastly, is the compliance and regulation. And this is a very important piece in the financial sector because because this is any kind of like mistakes can impact someone's financial health greatly. So there's a lot of regulations involved in this industry, and we need to constantly work with the regulators. One of example is that in US, the whole mortgage approval process being regulated. So if a mortgage is being approved, we need to provide a reason why the mortgage is being approved. So we couldn't simply say, oh, because the AI model told us that it is okay, so we approve it. So it's not the case. So we need to make sure that we can always have like a reason. We need to work with the regulator to provide a reasoning for that. So that is one thing that's traditionally different from the other industries. And the second thing is the moving piece in the regulations. One of the prominent use cases, EU is always very revolutionary in the space. So EU just realized the AI Act, but the other countries haven't started yet. So there are a lot of moving pieces in the regulation side. The other interesting example is that in US, the AI generated contents has no copyrights. But in China, like the AI generated content do have copyrights. So there are a lot of discrepancies between different countries as well. And these are things that the people in the financial sector need to be aware of. First of all, like if the regulation change like overnight, the model you're being using could be like non-usable anymore. So there are a lot of risks involved in this space as well. So a lot of things we need to be careful in terms of regulation. So these are the 4 different kind of risks that we need to be extremely careful about in financial industry. So here I come down to my regulations. So through my presentation, we talk about first of all, different kind of AI applications, adoptions. We talk about different examples of AI use cases in investment, in insurance, in fraud detection, etc. In real estate. And we talk about the benefits using AI. We talk about the risk of using AI. And here comes my recommendation. I think first of all, to use AI in financial sector, we need to focus on explainability. We need to make sure we understand the model well, and to make it explainable for the regulator to understand, for the decision maker to understand, even though it means we need to sacrifice a little bit of the say the accuracy or the effect of the model. And secondly, I think it's very important to use AI with a human in the loop. So we can use AI to create different kind of inputs or answers, and we can feed that into the human to make the final decision. And lastly, I'll talk about Gen AI on the Gen AI side. So we talk about hallucinations. We talk about like it's really hard to understand what goes into the foundational model. So in my opinion, for the financial sector, I think it's good to use RAG or like small language model. So RAG is a way to put together a much more controlled knowledge base, so we can control all the contents that go into the database, and we can tell the model to just only source from that database. So it's a much more controlled environment. Same thing for a small language model. We can control what goes inside the model, and we can train the model to do very specific tasks. And by doing so, we can reduce the possibility of hallucination and misleading information.